Hello, me again. Today is Friday, and I'm back to my beloved forest and gonna share a bit about my thoughts, my recent thoughts of what's happening in the markets again. I think everyone can probably see that this week's markets reaction, how the whole market is behaving, especially to certain sectors, is a bit extreme lah, or a bit extreme. And overall, I think that there's a general concept that people like the high net worth people are actually moving their assets to the safe haven, meaning they want to move their stuff to like more, like gold, things that are more safe, so that it beats the fluctuation. They don't want to be affected by whatever the market is doing. Now, why do people want to actually put money in things like gold or safe haven? There are some fundamental reasons that they want to do that. And obviously, one of it is not because they want to wear gold chains. Lah. Uh, they probably buy gold bars, especially those wealthy ones, the rich ones. They will usually buy all the gold bars directly physical gold, and they don't actually trade in forex, for example. They don't buy those digital assets. They actually buy physical gold. And I saw this pattern already happening during the start of March ish, around there. No, sorry, February. If you can see from if you believe in technical charts and stuff like that, there is a pattern where people are starting to buy gold already, and then it starts to accumulate from there. I think it was from maybe 1,005, 1,006 kind of price, and now it just keeps going up. Now it's above the 2,000, and of course the question is whether or not this will continue to grow. I don't think it's a matter of continuing to grow or not, but the fundamental concept is that the price of currency, meaning USD or all the other currencies, are actually dropping. So that's a different aspect to it. People are thinking, oh, I should buy gold because it's going up. No, actually, people are buying gold because the currency value is dropping. And it might not be obvious because usually currency is compared in between other currencies. And if every other currency is dropping at the same time, you actually see all the rest of the assets start to float up. That's why you see the stock market has been shooting up. All the other so-called asset prices that are in line with the COVID-19 trend will be actually boosted up tremendously. So there are two very big uh, fundamental things at play. One is, of course, COVID-19, right? And COVID-19 is not just COVID-19 itself, because if you just look at COVID-19 itself, then we should just purely look at pharmaceutical companies. But no, the bigger impact is that people are more concerned, or maybe they are more uh, um, they change their habits whereby it's now a trend to work from home. And that's why you see a lot of so-called technological uh, companies are actually being their multiples are tremendous. They're going up like crazy because simply because everybody now perceives that the trend is going to be there, where everybody is going to be working from home uh, in perpetuity. So that's one thing that everybody is actually concerned about, and that's why you can see overall the market is reacting that way. All those tech, you can use SaaS, IAS, so many names you want to use, whatever as a service, it's usually trending on the upside, especially after March. And if you can see those that actually are trending much higher than the pre-COVID-19 uh, their price, the market price, you will obviously see that this is really a momentum. They call it momentum investing. But of course, the question is whether or not this will be sustainable, whereby do people really work from home forever? Next question will be, of course, if the multiples that the market has applied to the the share price is already overload, is already extreme enough. Because there are also a combination of a lot of retail investors right now that are investing in the market, and I don't know it's a good or bad thing, but now they actually encourage very risky behavior because of low or no brokerage fee kind of trades. If you read the recent news from Bloomberg and many other news reports, they're talking about all these zero commissions trades, which then everybody will decide, oh, they should come out and trade. Even in Malaysia here, we have a lot of people now starting to trade for fun that they want to just come in and invest. I think, wow, quite exciting lah, you know. Of course, it boosts the asset price. And why do people do this? I think the next point comes to this. The second fundamental reason is because of the sheer amount of liquidity being pumped into the market, being pumped into the credit market, where everybody now is like given cash, almost. It's like given cash into your pocket. And most people do not actually save it, they do not actually spend it. What they do is they know that doing so, inside their head, they know that fundamentally the money has already been diluted in such a drastic manner that currency itself shrinks. So whatever asset prices and gold whatsoever that you see now that is floating up, you have to understand that part of it is actually pushed by this extreme liquidity coming in. So you can know that it's not exactly about super investing. You are very good at your investments and trades and stuff like that. But I recognize that it's a major concern that people are now feeling rich, but all they actually are now experiencing is just the migration of the value of currency into assets. So I think this is something that you really need to think about, and we all should really think about. And yeah, that's my sharing for today. Bye bye. See you next week. Leave comments.